So, if you think you know the Tesla story, that it's all about electric cars, well, a brand new analyst report says you're basically looking in the rearview mirror. The entire narrative is shifting, and shifting dramatically, away from vehicles and towards a future built on AI, robotics, and even computing in space. So, let's break down this radical new vision for the company.
And that really brings us to the single most important question you can ask about Tesla right now. Is it still just a car company? According to this analysis, the answer isn't just no. It's that the car itself is becoming just a shell for something way, way more ambitious.
And here's the answer, straight from the report. It argues that Tesla is transforming into something else, a complex technology platform for artificial intelligence, robotics, and space-based computing. I mean, think about that. This one idea just flips the entire script on the company's future. All right, so here's how we're going to break this all down. We'll kick things off with Tesla's big reinvention, then get real with the numbers. After that, we're diving deep into this wild Terafab project, weighing the risks, and then we'll get to the analyst's final call on all of it.
Okay, first up, Tesla's great reinvention. And look, this isn't just about changing a few things around. The report says this is a massive pivot, shifting the focus from the metal and wheels to the code and silicon that really make things happen.
And hey, this isn't just some theory on a piece of paper. The report points to some major proof Tesla has already stopped making the Model S and Model X. Why? Well, they're literally retooling the factory to build the Optimus humanoid robots. It's a straight-up trade. Out with the lower-margin cars, in with what they believe is the future. AI you can actually touch, AI that can work in the real world. Okay, so how does a huge move like that actually show up on the balance sheet? Well, right now, the numbers tell a story of two different Teslas. You've got the struggling car company of today, and then you have this potential tech giant of tomorrow. Yeah, if you look at the annual numbers, you can totally see why some investors are getting nervous. After years of just insane growth, revenue is starting to flatten out, and net income, it's taken a nosedive. This is what it looks like when you're fighting tooth and nail in EV price wars while also pouring billions into R&D. It's the classic growing pains of a company trying to become something new. But, and this is a big but, here's the other side of that coin. Even with that tough annual picture, the very last quarter delivered a massive surprise. We're talking a 25% beat on earnings per share. What does that tell you? It shows that even while they're making this huge pivot, they can still manage their books and pull a profit out of the hat. The analysts also zero in on a key technical indicator called the RSI, or Relative Strength Index. Right now, it's sitting at 23.91. Now, for people who follow the charts, anything under 30 is generally seen as oversold. It's basically a signal that maybe, just maybe, all the bad news has pushed the stock down too far, too fast, and it could be ready for a bounce back. Okay, so the present is a bit of a mixed bag, right? But the bull case, the argument for a huge future, it's all built on this one massive, almost science fiction idea. Let's pull back the curtain on the Terafab project. So what in the world is Terafab? Well, it's a colossal $25 billion team-up between Tesla, SpaceX, and xAI. And their mission? To build the world's biggest semiconductor factory, right in Austin. The goal is to crank out 1 terawatt of computing power every single year. Let me put that into perspective for you. That's roughly 50 times the entire global chip manufacturing capacity that exists today. All of it, combined. The scale is just mind-boggling. So how do they pull this off? The vision breaks down into 3 huge, ambitious steps. Step 1, build the most advanced 2-nanometer chip factory on the planet. Step 2, use those chips to launch your own data centers into orbit on SpaceX rockets. And step 3, use that space-based network to power a global fleet of AI-driven cars and robots. It's wild. And this chart right here, it just says it all. Check out the allocation. A massive 80% of all this new computing power isn't even for the cars on the road. It's for building this brand new AI infrastructure in space. According to this report, Tesla is basically becoming an AI infrastructure company that just happens to sell cars on the side. And the tech at the heart of this plan, I mean, wow, the new AI 5 chip they're going to make at Terafab, it's not just a small step up. We're talking a quantum leap. The report says it'll be 40 to 50 times faster than what they have now. This isn't just about making cars drive better. It's a huge strategic play to get completely away from relying on suppliers like NVIDIA. It's about taking total control of their own AI destiny. Okay, but let's be real. A vision this big, it's gonna come with some equally massive risks. The report is super clear on this. This is no sure thing. There are some serious hurdles to clear on the way to this, well, hyperspace future. The report flags 4 big concerns. First, you've got the regulators breathing down their necks, with the government's full self-driving probe getting more serious. Second, the price tag is just astronomical. We're talking over $20 billion in capital spending in 2026 alone. That could seriously burn through their cash. Third, a really key part of their energy plan actually depends on a big deal for Chinese solar equipment, which, adds a layer of geopolitical risk. And finally, you have the question of leadership. Some investors are worried that Elon Musk is just spread too thin across all his companies.
So you've got this incredible, futuristic vision on one side, and these very real, serious risks on the other. Where does that leave us? What's the final verdict from the analyst? What's the strategy here? The core advice in the report is basically telling investors to completely reboot how they think about the company. It says that obsessing over how many cars they deliver each quarter, it's like judging an aerospace company by how many rivets it uses. The real metric, according to this analysis, is how much progress they're making toward building the actual AI and computing infrastructure of the future. So working from that new playbook, the report gives a pretty clear strategy, and it starts with managing your risk. It points to $350 as that key support level, kind of a psychological floor. If it breaks below that, it could be a sign of a bigger problem. Now, in the shorter term, if the market starts to believe this new story and the stock recovers from being oversold like we talked about, the analyst puts a price target of $430 on it. And the big one, the optimistic 12-month bull case? Well, if the market really starts to price in this whole new narrative, if Terafab gets off to a good start, and if full self-driving can navigate those regulatory minefields, the report sees a potential path all the way up to $600 a share. At the end of the day, the report wraps everything up with this one simple, but honestly pretty profound piece of advice for investors. You have to look past all the daily noise and focus on what it calls the grand narrative, the ambition to build the actual infrastructure for a galactic civilization. It's a truly wild vision for a company that, remember, just started out by putting some batteries inside a car.